right. Good morning, people. It is Friday morning before the market time. So, this is payday for some of you and some of the income funds. But I'm continuing on to educate you guys in what I think is the biggest opportunity in the next 5 to 8 years. And I really want to focus because I think now is the time. So, in order to educate you, I need to continue to talk about some of the talking points. So people say, well, Bruce, the gold stocks haven't really done that well. And it's absolutely true. They've woken up, they're starting to break out. I think we really start to get a big breakout. But I will say to you, traditionally, when gold breaks out early on, and I've followed this in a whole decade of run in the 2000s, and sort of a little false start in 2016, they typically do better. But that just goes to show you how extended our current bull market, all of this hope on AI and crypto and all these other things is sort of slowed the adoption into gold stocks, which is a retail investment. But the central banks have told us for some time that they're buying gold, and the world's economies and the world's central banks are buying gold. So that's what I want to talk about. Why haven't gold stocks really moved, and what can we expect? All right. So I've done that in a couple different ways. I'll continue to educate you. So let's just look at a 2 year gold chart. So pretty nice. Just you guys saw me query my database and see if you bought a 3x physical gold and you were just in that in quarter one alone, you made 91% on your money. If you just bought GLD or something, you're up, 20 something percent. So why is gold up so much? Is this a fake out? Is this a something? Well, it's central banks. Central banks want to go to something when they fear war, they feel high valuations, they feel currency risk. So there's all kinds of geopolitical things that governments and central bankers who are conservative in nature look at. They know history, they know 2,000 years of history. I'm not so sure they've adopted the Michael Saylor approach, which I love Michael Saylor, and I hope BTC continues. But until BTC can separate itself from the NASDAQ, we're not going on to new highs this year in NASDAQ, at least 95% probability we don't. If it happens, I'll be first to say, hey, there's one more run. Maybe we get a 2 or 3 month run. But then all the things I've been talking about happen, and they happen in spades. So, what's been going on in central banks? They've been buying gold like crazy. That's what's driven it up for 2 years. Now, what's starting to happen is we've known, if you look at history and you followed the whole gold cycle like I did, you know that Chinese and Indians out of the Asian countries, Indonesians buy some, but Chinese and Indians, which are, when you add up those two populations, they're, I don't know, 40% of the world's population or something. They're both the two largest populous countries in the world. And although China's been slowing, and I think India's passed them, they buy gold because they know historically, right? The Chinese are very long term thinking. The average American and the American government looks out 6 months or 3 months. That's long term planning. The Chinese think of a lifetime. So the Indians, the same way. Gold is part of their culture because you can touch it, it's real. So the Shanghai Chinese gold market, if you will, instead of the COMEX in the US and the LBMA in London, has seen a huge surge both in the Communist Party, the PRC, of China. You're now seeing it in the Chinese citizens. They've been burned on real estate there. All you have to do is turn to the ghost cities and a lot of that kind of stuff. So they're back to wanting something real. They've got a huge unemployment. Chinese is sort of recovering from a crash there. And I think they're going back to the basics. So the Chinese are buying gold hand over fist now on the citizenry. And when you have that many people right? Our 341 billion, what are they? 1 point, I don't even keep Chinese statistics. But I got some interesting stats I'm going to share with you guys. I got the world debt clock. I got the US debt clock. So I'll flash that on here and then I'll show you some static results of that as well. So gold ETFs, same time, others are buying. North America is having gold ETF outflows. You look at the tail end of 2024, the last half of 2024, all the big gold ETFs, GLD and all that, they're all losing people's money there, right? Forget about whether, JP Morgan is managing it and they're releasing the gold and some of the conspiracy theories alone, like does Fort Worth, sorry, does Fort Knox actually have all the gold? I doubt it. It's probably been leased out. They're probably scurrying to bring it back. But there's all kinds of games that you suppress the gold price and the silver price, especially silver, with paper money, right? It's so hard. When you find the short dollar volume in silver is like 8 to 10 years worth of production, how can that be? There's not that much physical silver around because silver gets consumed. It's a consumer metal, electricity, medical, right? Solar, wind farms. There's so many things, mobile phones that consume silver, electric vehicles, atomic, what do you call it? What's the big bomb that they send? I did a whole thing on that in one of my videos. I can't think of the name of it, that we shoot it off the ships and the things. Tomahawk. The big Tomahawk missile uses like so many hundreds of pounds of silver or something inside it. It's a lot. So that's why one of those bombs costs like $1.5 million or something to shoot one Tomahawk missile. But anyway, the point being, silver is used, gold isn't. Yeah, a little bit in dentistry, but for the most part, gold is like a savings kind of thing. Physical gets consumed. We have all the physical gold that's ever been mined, but we don't have all the physical. It's in dumps, it's in various small pieces. Sure, there's some recycling going on, silverware to all kinds of things, but we do lose a certain percentage of it and it gets used by industry. All right. So why would North America be selling off gold and not buying it? Well, first off, here's the perception. I'm talking Canada, US, Mexico, North America. There's been a pretty strong stock market, especially in the big US market. We've had a reasonably strong dollar. We've been told we have a strong economy. I think some of that is BS, but nonetheless, the average person on the street thinks that. Inflation has been coming down. I'll call it stubborn later, and I think it's bottomed and headed back up, but we have quailed it to some degree. So people buy gold when central banks start cutting interest rates. And so you're not seeing gold bought just in the gold and silver ETFs, okay? Even though they never have all of the metal that they say they have. So you're much better at just, if you're buying this stuff, keeping it safe at home. There are some other places you can store it for reasonable cost. The other thing, what happened with gold after Trump? Again, the same mentality. Well, with Trump in, we're going to cut debt, we're going to do Doge. He gets elected, and a run up, gold was doing pretty well. But after he got right, as it was determined that he was going to win the election and he won the election, gold pulled back. Now, subsequently, we've gone nuts in the first quarter and moved right on back up to all time highs. I think March alone had 19 all time highs in gold. But that's the global world central banks doing it. That's not North Americans running out and buying their gold stuff. They're still buying BTC. They're still chasing Misty. They're still chasing, Round Hill, all these weekly payers. The average person really doesn't get it on the commodity cycle. They're chasing money. They're chasing income. They're still doing real estate. They're doing REITs. I think a big comeuppance is coming. I think the only issue is does BTC participate? And World Traveler, thanks for your comment where you say you disagree with me. I would say that I'm mixed. I don't have a firm opinion. I'm such a Michael Saylor fan. I believe in BTC, but this comeuppance that I see in the marketplace, BTC has to show me that people think of it as digital gold. If they don't think of it as digital gold in the store of value, it's not going to continue. And it seems like it's been running along with Nvidia and all the big tech on the NASDAQ 100, and that's over for the near term, right? That thing that needs to correct probably from height to trough 50%. Okay, and until that all finishes up, we're going to have lower highs and lower lows in the Nasdaq and probably the S&P. You just don't get a 12-year bull run that just continues up in a bull run. It doesn't go to 15 and 20 and 30 and out 50 years. There's just no way to generate that. You have to relieve the pressure. Even in gold, somebody said, oh, well, gold was down yesterday. Yeah, the market was psychotic. It was all over the place. Gold likely topped. It's probably done for the month of April. Could it still go up to 32, 32.50? 20, 30% probability, 70% or more. I feel like gold's top. We go down in April. But if we go down there and we pull back, say 15 or 20% in gold, we're probably going to go down greater in the general stock market indexes. And you guys aren't going to like that haven't figured out you need to be in commodities and you need to be in miners and gold. And the miners haven't even really begun. I'd say the first quarter, they did slightly better than physical gold, but they are typically be 3x or 4x, and we should start seeing that. Okay. So when I say something, don't think it starts tomorrow and every day from then. Or somebody say, Bruce, you're totally wrong. Gold just pulled back to 2,800. If it does, buy it with every penny you've got, right? Or buy gold miners. Okay. So let's continue talking. So after Trump elected the ETFs, here's my clock. I want to show you guys this, and then I'm going to show you. Well, let me show you this first. So here's your live clock, right? Here's your US debt. Go out here to usdebtclock.org. And let's give you every possible statistic you want. I was blown away. Now, this is what we call federal or national debt. This isn't state debt, right? When you're talking 36 trillion, 36.681992, almost 36.682 trillion. Okay. So you got federal budget deficits, you got federal spending, you got debt per citizen, debt per taxpayer, right? You can go in here to state debt clocks. Now, I do use this, okay? And I think this is effective. And what I've really done here in this chart is take a snapshot of this an hour ago when I was building my presentation. So it's pretty darn close, right? And I wanted you to see. So after Trump, I think people thought, oh, well, he's going to cut waste, lower regulations, everything. We're going to be go, 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 go. Well, it doesn't work like that. I mean, not getting political, but the last 4 years were just brutal. These $1 billion spends and leaving your friend 2 billion in this fund and pardoning this guy and giving it all to illegals and all this crap that they did to your taxpayer money. If you're happy with it, God bless you. I'm not, and I know a lot of other people aren't happy about it. I want all that cut out. Don't touch my Social Security, okay? I paid in, I'm legitimate, and I want to collect it. Am I fearful they're going to touch it at all? No. Why do people run around? But that's what happened. They want to create FUD, fear, uncertainty, and doubt. So people go, oh my God, he's not even an elected official. No, he's just probably one of the smartest men in the world and smartest business savvy business people we've ever had. We should be begging him to do this instead of burning his cars and doing all the rest. I loved how the left just absolutely loved him when he was an EV vehicle guy and we were doing green climate and mandating electric cars. But the minute he's aligned with Trump, they hate him. They want to kill him. He's Hitler, right? It just, to me, it's just craziness. If this divide goes on, I hope you guys are prepared to fight your neighbors and have a civil war, because I think civil war too comes to America based on the hatred across the lines. It may take 2 or 3 more years, but don't think it couldn't happen. And you start getting states succeeding from the nation saying, we want to create, US one and we want to be US two, whatever you want to call it. I mean, it's literally comes down, it could be red and blue states joining these factions. You're going to have neighbor against neighbor, brother against brother, sister against sister. I mean, don't think it couldn't happen. It happened in America's history once. We don't learn from history very much. We tend to repeat it. And that's scary alone. But we've done so many scary things now, I'm not sure it's going to happen. I get hate on this. I get people the minute I say something about Trump, they want to, cancel their subscription to my channel. Good on you. Do what you want to do. I'm not here to preach politics. I'm here to preach economics and how to make money. And if you don't understand that, too bad on you. Okay? You can hate my politics and love my economics. That's what you should be doing. But I'm not really telling you what to do. I'm just saying this comes down to a debt issue you know um, I'm for the tariffs, but we're going to go through a lot of pain in it, but it's probably going to slowly fix some of the things that we've built up over 40 years. Okay, nothing's perfect, guys. All right, so now you see all this debt. You cannot have these kinds of debts without paying it back. The national debt is what we owe, okay, ourselves. It's who we borrowed from. On top of that, you have some external debt to GDP ratio. So this means not somebody that bought our treasuries, but somebody that directly loaned the government some kind of money or something. But typically, it's just showing the debt on the books when we print money. Otherwise, everybody says, well, just print the money. It's not real anyhow. Well, it is real money. You do an accounting for it. So has inflation come down? Yeah. Look at this. 2022. But what do you think's happened? It's based. If you get on up into 2025, it's ebbing back up. 2%. Below 2% is what you want to look at historically. We're running probably closer to 3.5 again now. So, what does the dollar do? What do all paper currencies do? Why do you think things like Bitcoin exist, where you're only going to have 21, million of the coins? Why do you think gold exists to try and back currencies, or being a partial backing of the currency? The M2 and so forth. It's just these dollars and the way governments are out of control. Show me one government that can do something more efficient than a corporation can do. A small, nimble, or somebody like Elon Musk that can just go out there and engineer his way into a market and make it happen with hard work. That guy will go in and work 20 hours a day and sleep on the factory floor, you know. And then you guys want to call him, a freak and a billionaire and Hitler and all this stuff. Hitler should have worked so hard. All right, don't get me going. Stagflation is good for gold. Well, what's the environment we're living in? High inflation and weak growth favors gold. What's your average returns from 72 to 22 with stagflation in these kinds of environments? Gold goes up 21%, commodities go up 14%. Look at stocks. They don't do so well in this environment. That's what, if you haven't heard my message, guys, I mean, there are some stocks. People go in and say, "I want the Procter and Gambles. I want the shampoo and the things." No matter what, you still have to wash your hair. No matter what, you need deodorant. no matter what, just some of the basics. You want to brush your teeth. You know, there's just some things that civilized people in the modern world are going to do. They may cut back, they may look at the item on sale, etc. But those are staples, things that you have to have. You know, they said before that when McDonald's is hurting, that's your average guy that's eating McDonald's a lot. That's your 50K and under in the United States income, or family income. Those are the people eating frequently at your fast food restaurants. So, all right, gold stocks. Sorry for the typo. Where is the leverage? Well, you typically have it. Gold stocks typically outperform. Sorry about the typo there. Perform gold to start the bull run. So we see back in 86, that wasn't really the start of a bull run, but it was a mini. This clearly was the start of a bull run. I remember it very well. The South African miners, Harmony, Goldfields, there were a few that started, and those guys were the ones outpacing in that first, second, third quarter of 2001 when the gold stocks were running. So not only do you have gold stocks outperforming the metal, but you have a little, sometimes the big caps take off. And then that, as you get more mature into the market, then people start chasing the small caps, the explorers, right? Or maybe somebody has a very small mine, but they're drilling a lot for more. So you have juniors, you have large cap, and you have just pure explorers. So you have to own a basket. You have to own 4, 5, 8, 10 junior explorers and hope you get a 50 bagger, right? Because you're probably going to get 2 or 3 that go bankrupt. You're going to get some that give you a 15% a year return, but you're going to get a few 10, 15, and 20 baggers if you buy enough. Now, when you can go out and buy an Anikio AEM, to me, that's the second largest gold mining company, one of the best run gold companies in the world. So, anyway, this is starting to change. I showed you on my table in the earlier video, we're starting to break out. What else is happening? Newmont. I've been surprised as hell. I'll see it move up and pull back. Newmont is building up huge margins. Anikio AEM is building up huge margins. I got a chart on them. So this usually acts as a prelude to large price gains in the shares. So what happens? Remember you're going back in quarters. So when you come out and you report on the first quarter, we won't see those earnings for a while, right? So when we move well into April, another week or 2 or 3 or 4, we'll get the big cap miners giving you the earning. We have to look at gold. So gold in the quarter that was sold started in January, ran to March. Well, we were 3,100 for a lot of March. We were probably, I don't know, 2,800. I'm not looking at the math here for that first quarter. So, because this isn't a quarterly chart, you just keep on going up, right? And some of it you sell what you mined from the previous quarter. So you're all in cost. But when miners with look at oil's down to $66. So your second quarter, if if oil doesn't fly up to 80 or 90, which I don't see it happening. If anything, I see it further for a little while. It's getting close to a bottom. But when you got oil in the 60s, and you've got an all-in sustaining, say, a gold production cost, right? And it's $1,200. Well, when you're selling 2,400 gold, that's 100% margin, right? A free cash flow above your cost. What happens when gold's 2,700? So you had a $1,300, or sorry, what did I say? I said a 2,400 sales price, and you had a 1,200, all in cost. So you had a $1,200 profit. So when that goes from 26 to 3,000 that you recognize, and you're still at that 12 or 13, now you have 1,700. So your free cash flow went up another 25% quarter over quarter. So that's what's happening. These guys are stacking money. Is the public out there buying it like crazy? Hell no. There's very little interest in this stuff. I'm talking to you about it because I know about it, right? But even I haven't been buying it as greatly as I've owned AEM for over a year. I think I was up what 60, 70%. And it's so much that I don't even look anymore. I just know I'm holding and I know it's nowhere near the top. It's going so much higher. So you can buy on dips. I mean, yesterday I think it went from 108 to 104, and then aftermarket it went to 110. Everything is all over the map because the markets are so volatile. They're so fearful of tariffs and all the uncertainty. Markets do not like uncertainty. Wait till we get into May. I think the next impetus, I think April is a general down month for gold. Now, don't get me wrong, if over the next 3 days we run up to 3,200 and that's the top, but I think that in April we come below 3,000. So gold's going to go on sale. Where it gets to, I don't know, 27, I doubt 26. Okay. But I see May as taking off. I've got some gurus that forecast this geopolitical, worldwide liquidity and money being moved around by some big nations usually indicate that strikes and war is on the horizon. Whether it's a full war or it's just a conflict, if we go over and bomb the hell out of Iran and they retaliate on our bases and start bombing Israel, that's a major escalation of things. Very likely that takes place in May. If that takes place in May, that could cause this 2,700 gold to be 34, 3,500. And so that's what I mean by opportunity. There's more upside left this year, but I'm not going to tell you we don't have downside. Just look at your gold stocks, pick some. My next few videos is going to be some of my favorite picks. I just got to continue to educate you guys. Okay. AEM, Anikio Eagle. Hard to read on numbers here, but look at this. This is a projected into this first quarter. This is historical. These are some of the lowest relative historical cash flow price. Nobody has these kinds of margins and prices. Nvidia wishes it had this right now. Instead, these things are sky high. That's why they're going to fall so much further. Look at the yield on the average S. This is the average S&P. This is not the Mag 7. 1.3% yield. The XAU is just another way of GDX, HUI. They're just various named. XAU goes way, way back. It's probably the oldest of all of them. Then you have HUI, and then a newer index, but still decade or more, is the GDX. 1.5% yield. Miners always pay, AEM pays me, I think, 1.4% on that stock that I've held over the last year. But that's paltry. I mean, I have 70% or more gain in the stock, right? But if they want to pay me 1.4% a year, I'm happy to take it. Okay? Look at the price to book. The S&P. This is the average stock of 500. Okay, what do you think some of those big guys are? 10 to 1, 20 to 1, 1.7 times on the Dow. Look at price to cash flow. 22 times. You tell me who's overvalued. And we want to go to where the puck is going. Okay. If you wait 6 months, GDX is maybe 70. Right now it's 45. So you tell me, do you want to buy it at 70 knowing it might go to 150 or 205 more years? Or do you want to nibble on some at 45 now and hopefully you can get some at 40 or 39 in the next month? Okay. So I'm asking you to listen to what I'm telling you and understand this. And what I showed you in some of the earlier stuff, the trend has changed. The gold sector is small, guys. Newmont, the largest miner, market cap is 45 billion. Sorry, I cut this off a little bit. New Gold, how much new gold is mined by all the miners in the world every year? 328 billion. Okay. Let's take the top 100 gold miners, which is basically all the market, all the gold miners. 410 billion. That's a market cap of all those guys. But they produce 328 billion. Value of all gold ever mined in the history of the world. It would fit in an Olympic swimming pool, by the way, like 12 feet deep, 100 meters long, whatever. All the gold that's ever been mined would. It's a lot of gold, so I don't know how many thousands a ton. But what's the value of that even at the current gold price? 14 trillion. What is the value of the five most valuable stocks in the US stock market? 15.1 trillion. So you're telling me the whole world's gold supply that's ever been mined that's supposed to be considered safety and money is less than five of the largest cap market stocks. It's ludicrous. It will not stay that way, people. One's going to come down some and one's going to go up a hell of a lot. I know which is which. Okay. So that's what I got for you. That's lesson two. The next ones, I'm just going to jump into individual miners. But again, hit me up with questions, please, on what you think in terms of what else you need to know to get position other than individual names. But if you want a miner to watch, go look at AEM. It's my favorite. These are all 4 to 5 Xers before the bull market is done. And they're going to pay you probably AEM's dividend yield will probably be like 10 times what it is now, right? If it's paying, on $100, it's paying $1.40, then it's probably going to be paying $10 on every $100. At some point, it'll probably have a 10%, yield on the stock price. But the stock price will be 5 times up. That would be my guess. In the next 5 to 7 years, you'll probably have a 5X in your well-run gold majors, which AEM to me is one of the best run. AU Gold is another fantastic company. Barrick a little less so. It's got some African risk. It's got Newmont's got its challenges, but I would still rate Newmont pretty well. And then when we get into individual smaller miners, there's some great opportunities. And you want to be in those that mine silver. There are no pure silver miners, guys. If a company mines as much as 25% of its metal is silver, that's very high, right? Pan American Silver, Hecla, Coeur d'Alene. I mean, I could go on and on, but let me give you my picks, okay, in the next video. Okay, again, Bruce with Targeted Wealth Creation. I'm not a financial advisor. I hope you guys find this. It's a lot of work to dig all this out. I know it all, but I still got to go find my materials and put it together. It's not like just filling in a spreadsheet like I do with this is what Roundhill showed and this is what Defiant showed, and this is how it compares to Yield Max. I mean, I'm still going to do those for you people, but if you don't see that that isn't where the bulk of your money needs to be, you need to figure it out. I think the guys that got overextended on margin and some of these Discord groups, and everybody was talking about HELOC loans and max out the margin, and I'm going to be a millionaire. I think that this fear is just about done away with the majority. So hopefully there's some people out there looking for what I'm expounding on. There's other people that do nothing but gold and silver. I like all of it, but I like it around commodity based things. So even if I, tell you an income fund, go buy GDXY. Why? Because I know over multiple years that it will perform. They may not manage it as well as somebody else, and I'll point out some other ones, right? But I think the time for the miners to move versus the metal itself, we should do much, much better in the miners. And physical silver should start its 3X on gold, the metal. along with platinum as well. All right, guys, Bruce with Targeted Wealth Creation. Peace out. Have a good one. Not financial advice. Bye for now.